focus is on exposing them to a career as an entrepreneur and the immense possibilities it promises for them. We at NSRCELWEP believe that the entrepreneurial skill is almost very close to a life skill. MPWE is more than a decade old. NPEFP is going to be admitted to STEM cohort this year. The PGP elective, that is the elective courses of the MBA programs, have been running for more than a decade now. We have graduated this more to a required course in our MBA curriculum. So that means we have made progress all along.
What we could typically expect is a one-on-one session, very undivided attention from our mentors, so that you could ask whatever you want. There's no right and wrong answers. So the more questions you ask will help you to solve. And similarly, we also ask more questions for them so that it helps them to decide, it helps them to focus. And also we get down into some of the business plan thinking as well, so that they are in the right direction as far as what they want to do next.
The ability to kind of nurture entrepreneurial talent on campus, bring to bear many very valued stakeholders, alumni, faculty, student, corporates, and even the government, right? I think that's a very important aspect of what, at a unique position that NSRCEL would have. The fact that it's housed at a very prestigious institution, venerable institution, is very important.
A database of different inputs that startups need. Financial, accounting, business, HR, legal, all of that, typically most entrepreneurs struggle to find that at an affordable cost.
Over the years, we incubated close to 60 companies. We've also trained close to 1,000 women, and we have about 250 odd entrepreneurs and family businesses who have been trained and who are now working in their own ventures.
The support and the belief that they have in your company and the extent of support they are willing to give it is something great, and we enjoyed the work throughout our incubation period in NSRCELWEP.
It also opens up phenomenal opportunities to access these smart teams and different campuses and facilities to do your talent amazing, but people want to work with it.
The fact that I'm able to meet fellow startups and hear their stories is very inspiring. And also to learn from the academia, the best academia, on some of the effective ways to run startups in the
Very soon in the future, our impact, our reach of entrepreneurial education is going to be far, far higher than what it is today.
So if you have an interesting idea and you are trying to be remarkable, one of the places that you could come to is NSRCEL.
Good morning. Welcome to For Startups by NSRCEL. I am Akash Naidu, representing NSRCEL, the startup hub at IIM Bangalore. NSRCEL was one of the earliest incubators set up in the country back at a time when startups were not even a buzzword. Today, we have incubated over 100 ventures with a combined valuation of over $1 billion. What I would like to bring to your attention is some of the activities that we pursue at NSRCEL. The core of what we do here is about supporting entrepreneurs, early-stage entrepreneurs in succeeding to the next level. What we'd like to do now is take you through some of the activities at NSRCEL, the startup hub at IIMB. Some of the activities that we have put out for early-stage entrepreneurs are mentoring, launchpad, incubation, and seed funding. We also have some of the education programs for early stage entrepreneurs, such as MPWE, Management Program for Women Entrepreneurs, and MPEFP, Management Program for Entrepreneurs and Family Businesses. We also recently have come up with a couple of special initiatives called NSRCEL Social. This is specially for ventures in the social space who are seeking incubation support. And more recently, we had a program supported by Goldman Sachs, which is the Women Startup Program, wherein women entrepreneurs took up an online course and actually went through boot camps and got incubated at NSRCEL subsequently. And I would like to take this opportunity to give you a perspective of some of the stories of how entrepreneurs have engaged with NSRCEL and where they're today. Let me tell you the story of a bunch of students who were really passionate about helping other students discover their interests. Today, they call the Climber, incubated at NSRCEL, having impacted over 40,000 students in helping them find their passions. On another note, we had a group of experienced professionals seated in the same auditorium as part of a 4 Startups program. They actually gave up their high-paying jobs to start an initiative called Jiva Bhumi to help farmers get connected to conscious consumers. These are some of the examples which demonstrate that we are a sector-agnostic incubator and we are welcoming any entrepreneur with an interesting idea. So some of the initiatives, and I would like to make it a little more specific about how you could engage with NSRCEL and take your idea to the next level. This is typically the process. The journey at NSRCEL typically starts with a mentoring session. How this works is you apply online, and I'm going to show you how you can apply. You apply online for a mentoring session. A one-on-one session is set up with one of our mentors, and then it is followed up by a Launchpad. Launchpad is actually a pre-incubation program where your idea gets refined, your thought process gets more streamlined, and then eventually you get into incubation. So Launchpad is a 3-month program where startups in the early idea stage come in with a very basic sort of idea. This is what I want to do. End of 3 months, you get structured guidance, and more importantly, you're in the presence of peers from whom you get to learn a lot. Recently, just as of yesterday, we concluded the first batch of our Launchpad program, and we are starting with the next batch on April 3rd. And this is on a rolling basis. You can keep applying and be selected for the next batch of Launchpad. I would urge you to apply online for mentoring through the apply link on the website. Typically, what we expect are some basic details and a business plan. Business plan does not have to be very complex. Otherwise, all we need to know is what is the area that you're in and the kind of support that you're seeking. So this is as far as the registration is concerned. And I'd like to set some context for today's topic, thinking global for Indian startups. There have been a lot of developments in the recent past in some of the major economies in terms of policy level changes. And we wanted to bring to the attention of some of our budding early stage entrepreneurs and sow a seed as to how they can think of going global in the current context of the economic developments that are surrounding us. And so we have put together today's event, composed a very eclectic panel who can really help you with various perspectives around how you can go global. So the first speaker for today is Mr. Denny Kurian. Denny is the founder, president, and CEO of the Bangalore chapter of Kiretsu Forum. Kiretsu Forum is an international angel investor network with over 50 chapters across various geographies. And so we thought he would be the right person. Being an investor, he could really tell us what is the kind of action going on in other geographies across the world. He would take us through some of the international market opportunities, sectors that are in flavor, and more importantly, what's in it for you in terms of the other ecosystems. So on that note, I'd like to welcome Denny onto the stage. Denny, the stage is yours. Yeah. Yeah, sure. I'll just...
get the other one? Sorry. Can you press that button one more time? Yes. Yeah. Good morning. Technology is still complicated as far as I am concerned. So good morning once again, and thank you, Akash, for this opportunity to be speaking here on the first day of April. And all of you know what it means. At least until the afternoon of the first day of April, you generally get some liberties in saying some things without really being accountable to the veracity of that. I have absolutely no plan in making this an April Fool's joke. Neither are you here for that. But I used to be in the media, and those days, the one thing we would tell all our reporters on, when April 1st comes, is that no matter how interesting an idea, a story that lands on your table, if it's April 1, not only should you treat it with a pinch of salt, you should exercise extreme caution in verifying the facts before you, decide whether it's real or not, before you decide whether you want to use it or not. Now, I'm going to share some numbers, some thoughts. These are things which we just put together, which I thought would be of interest to you. But I would, still request the same amount of caution. Treat it with not a little bit of pinch of salt, but a lot of salt. Go through that, take whatever you feel is useful, and make your own conclusions. My idea here is only to share some of the things that are going on in the overall early stage funding ecosystem in the world. So with that, let me come to the topic. The idea I think today is to talk about how great companies can be built in India and how they can be taken around the world and made global. And normally there are 2 or 3 things that you would require for something like that to happen. One, of course, is an enabling environment, an ecosystem in which entrepreneurship is encouraged, it prospers, and as a result, there is a lot of innovation happening, which I think is happening in India. Particularly with the way Bangalore is getting mentioned over and over again as a startup ecosystem, the way India is coming up, I think that process is already on. The other important aspect is that you need to have a reasonably big market to be able to prove some of these concepts before they are taken to the rest of the world, which again, I think India offers. There's no debate about that. And the third part, I think, is the ability for companies to find funding, because it's like, bringing up a baby. If you don't feed the right amount of food at the right time, the baby doesn't grow, no matter how well founded the baby is. It's important in both ways. You need to have the right amount of food at the right time, but also you need to make sure that you're not overfeeding the baby. And I think in funding too, it is very, very important. You've seen cases where some companies have been overfed and therefore, developed their own problems with overfeeding. And there have also been cases of good companies not getting enough funding and therefore not being able to scale up and grow. Now, of these 3, I just want to focus on one aspect, which is funding, which is where I come from. And I'm sure later on in the panel, we will also talk about some of the other aspect of what needs to be done or what is going on that will really generate good companies out of India. And that one part I want to talk about is funding. Do I move it? I can manage that. Thank you. Thank you very much. Just wanted to figure out what I need to do. When it comes to funding, again, I think all of you are aware of what's going on in the ecosystem, not only in India, but around the world. And in India, I'm sure most of you would have heard about a company called Flipkart. And at least some of you have read about how with each round of money being pumped in, the valuation comes down. So you are learning a new trick. You put in more money and the value comes down. That's something new. You've heard about the troubles being now faced by Snapdeal. You would have read about how the founders have now decided to forgo their salaries. Companies spending 2,000-3,000 crores to have a top line of 1,000 crores. Again, a mystery which many of them have proven that can be done. You've read about the closure of Stazilla and how that's not only affecting that particular company, but the overall sentiment and morale in the industry, with the founder still struggling to get a bail. So there's been a lot of concern as to how funding is evolving, if there is a slowdown, and if there is one, how that is going to affect the overall ecosystem. So it's only natural that there is a bit of pessimism when it comes to funding in India and elsewhere. And the next 20-30 minutes, I just want to take and share some information around the world to put this in context and tell you that not all of that is bad news. There is still a silver lining which is waiting. It's more than a silver lining, provided we see it in the context. Now, this is not to say that companies need to be solid. You need to have real products. You need to be solving real issues before you can raise money and grow global companies. Oh yeah, thanks, that's even better. Excuse me. So which of the buttons? I often press the button to shut it down. These two, right? Yes. Okay, thank you. So I want to talk about the state of the VC industry. And this is again, what I was talking about in India was also the case globally, 2014, 2015, and there was a lot of concern as to what's going on. Now, let me tell you that this research is done by an agency called Upfront. These are the two researchers who put together this data, so complete credit is to them. I'm only using this information to drive home some of these points. So let's first talk about some of the things which you already know, some of which we did talk about. 2013 to 15 was when really the VC market overheated. There was certainly an increase in irrational behavior. As you can see, valuations went up 3 times or even more. The capital invested went up more than 2 times. This is global. And a lot of this data is taken from the US, which still continues to be the most active ecosystem when it comes to early stage companies, funding, innovation, and so on. So that euphoria, that funding ushered in the age of the unicorns. Everyone was after unicorns. If I'm not part of one, I want to find the next one. People who are willing to bet a lot of money on that. And that led to a situation where VCs were writing large checks, but this was typically the kind of conversation. You name the price, and I will name the terms. It led to a lot of very high value, high priced investments with terms which very often companies are regretting later on. This could have been a very classic case, extremely high valuation, but as an investor, you would have an IPO downside protection. You will have multiple liquidation preferences. You will have participation preferences and many other terms which were never heard of, but now I think most companies raising money are very, very familiar with. Now, these were still good companies, great companies. The only issue probably was that the valuations were not really in touch with the reality that they represented at the time when they were raising money. And this, I think, was also the case with many of the big companies, including the so-called unicorns in India that raise money. And that probably is the reason why now when you put in another $1 billion, some maths work and the valuation comes down. I mean, this is a new way of looking at maths. But still not to say that these were not great companies and that they won't succeed. And because of what was going on in the world, in the funding ecosystem, many predicted that the winter was coming, that it's not going to be so rosy going forward. Now, what happened to that? That is what we want to look at first. The winter did come. There was no debate about that. 31% of the companies of the VCs made fewer investments in 2016. Only 16% made investments which were more than in the previous year. Valuations certainly dropped. For 76%, valuations actually came down. It was only in the case of 8% of the companies where the VCs saw some increase in the valuations. It was also a time of reality check. 63% of the companies very significantly cut their operating costs in 2016, and 12% said they will continue to do that in 2017. It's only one quarter that thought they needn't change. So yes, the winter did come. The only difference probably was that it was a much milder winter than most people had anticipated. And probably there was an element of global warming, not just with regards to climate change, but also with regards to the investment climate around the world. Now, what do I mean by global warming? Despite the kind of winter that we've had in 2016, and it's been true, while these numbers are global and very heavily skewed in favor of the US, the trend is the same, whether it's India, whether it's some of the other economies. We saw the same problems in 2016. Funding was much less. There was a winter, but there was still a lot happening which is behind the scenes. And very much like global warming, until the time now it's become, it's come to a stage where everyone is aware. When global warming was beginning to happen, a lot of people wrote it off, and it was not visible. And I think what's been going on in the ecosystem, in the funding ecosystem, is following a similar pattern. There's a lot going on behind the scenes, which I think the investors are beginning to realize, and that is what I want to bring your attention to today. And the biggest sign of that has been the fact that there's been an influx of foreign capital into US startups last year. As you can see, in 2016, $29 billion invested into the US companies. It was mostly the tech sector which benefited, but there were also other sectors which got reasonable amounts of funding, as opposed to just 10 billion the year before that. Traditionally, there have been the big US companies which have been the investors, but suddenly you also see the rise of Chinese investors coming in. So you have Baidu, Alibaba, Tencent, all of them getting very, very aggressive in investing worldwide, but particularly into the US. These are some of the examples. Baidu last year launched 2 major funds. One is Baidu Ventures, $200 million. It is an early stage fund looking primarily at artificial intelligence, AR, VR, next generation technology, and so on. And there was a larger $3 billion fund under Baidu Capital, which is more of a late stage tech fund, with each check being in the range of $50 million to $100 million. Alibaba, as you can see, I won't take too much time on these. I mean, just to give you a sense of what's been going on. Alibaba invested $800 million into a Series C with Magic Leap. Now that is like 20 seed funds just in one deal. You can see the impact of that. And there have been a large number of smaller, lesser known Chinese funds moving into the space and looking for opportunities to invest. These are again examples. These 3 funds together invested $690 million into WeWork, which, as some of you would have read, is now coming to India, with I think their first stop being Delhi. So the beehives and many other co-working spaces will soon have their share of foreign competition. This was another reasonably big raise, 80 million in Series B for Nexter. And you had many of these Tencent, GQY investing into very, very interesting companies. Now that's not all. The gorilla in the room is still not these medium-sized Chinese funds which are getting more active. You can see SoftBank. Many of you are familiar with the kind of money they've been pouring into markets, including in India, and some of the big names. SoftBank, Saudi Arabia's public investment fund, and Mubadala, which is Abu Dhabi's sovereign wealth fund, together have raised a $100 billion tech fund waiting to be invested. As oil prices collapsed and continue to remain reasonable, there's been a serious search for alternative opportunities, particularly from the Middle East. As you would see, many of these countries and their sovereign wealth funds are looking at getting active. That is Temasek, Singapore's sovereign wealth fund, one of the two that they have. And for those of you who would recognize her, that is the Prime Minister's wife, Singapore Prime Minister's wife, who heads Temasek, which is one of the two large funds. And Temasek has put $350 million into Vertex, which is primarily looking at the US tech sector. The other large fund in Singapore, GIC, Government of Singapore Investment Corporation, which manages Singapore's pension funds, is equally active. And you would have been reading about them investing into many other big companies in India, as well as in other countries. So Temasek invested $800 million into Verily. Just to give you an idea, all these examples were just to give you a sense that 93% of the VCs have actually seen an increase in interest from an international LP base. And this is very, very significant. And this goes against the general thinking that money is drying up and that companies are not going to get money. It's only 7% which did not see an interest. Now, the second pillar of global warming, the first is how the VCs have been raising money, getting ready for investment. The second is the rise of the corporate VC. Now, this is new, and this is something that's been happening only in the last 1 or 2 years. There's been a steady increase in the number of corporates that have been actively promoting venture investing arms around the world. And this is happening in India too. I mean, some of the big IT companies are setting up accelerators, incubators, setting up funds to support these companies. Many of these are familiar names: Intel, Qualcomm, Salesforce, Cisco, all looking at substantial amounts of money to be invested into early stage companies. And then look at that, Comcast, NBC Universal, together putting $200 million into BuzzFeed. General Motors putting $500 million into Lyft, or BMW now ramping up a venture fund of $530 million in 2016, waiting to be invested. So when Sesame Street becomes a venture investor, the time has come. The market has picked up, and that is where we are today. So unlike the VCs, which have been raising a lot of money but have been a little bit more conservative in investing in 2016, the corporates have actually been making more investments in 2016. 34% of them saw investments go up, as opposed to 18% who noticed a decline. And half of these corporates, exactly half of them, expect investments to pick up even more in 2017. And the third pillar of global warming, there have been exits supported by M&A from non-traditional buyers. Now again, when it comes to raising money, the biggest challenge is not the lack of capital, but it is the inability for those who've already invested money to get exits and then redeploy that capital into the market. There have been very few exits, and that was, again, keeping investors subdued. Now that's changing. And that's changing with activity from very, very non-traditional kind of spaces. Many of these are exits, which happened last year. I won't go into the details, but as you can see, most of them are reasonably big exits to put money back into the hands of VCs and investors. Middle market PEs are entering the space. They are looking for growth. And earlier this year, all eyes were on the Snapchat IPO that was supposed to be the biggest since Facebook and was the most anticipated since Twitter. And earlier, not this month, last month now, when that IPO happened, those of you who've been following it up know that nothing at all happened to dent the sentiment. If at all, it has actually boosted the sentiment. The way that IPO listed and the way the share price has been moving since the listing. So again, there is, a renewed sense of optimism, euphoria in the market. Now, this is not to say that there is a huge backlog of, many other scaling companies which are still looking for liquidity. But this will begin to happen as you see some of these funds begin to get deployed. And the fourth pillar then of global warming. The VCs, regardless of what they've been doing the last 1 year, have significant dry powder, and they're waiting for the opportunity. LPs have finally restocked their coffers with distributions happening. And you can see, again, that more money, more LP money means more funds, more dollars, and more dollars means nothing but a further warming in the investment ecosystem. 2016, so many of these VCs raised funds. 11 firms raised 1 billion or more, and more funds are now well established. Micro funds. Now that is another emerging area. Micro funds are also getting more and more established and more active in the whole ecosystem. So the low interest environment encourages more capital to chase ventures that are yielding more than the traditional markets. And this is what is going to kind of define the way investors will look at investment opportunities going forward. So as you saw, there is an increase in foreign capital flows. Corporate investors have become more active. There is increased LP distribution. New VCs are coming up. Existing VCs are raising more money. There will be some repatriation of capital between countries, with the dollar being a little unsteady after Trump came. But again, the money is there. It's just flowing from one market to the other. And all of this would mean that there will likely be more M&A activity and IPOs in the market, which in a way is very good for companies. So the prognosis is that funding will pick up. So where are we headed? There is a reason why I wanted to share all of this with you. How do LPs feel about the direction of the investment industry? 32% of the LPs are growing their VC allocation. It's only 11% who feel they are already over-allocated. 45% of the VCs are actually looking at adding more VC managers, which again is an indication of increased activity going forward. Unsurprisingly, VCs are very, very bullish. 61% of them are extremely bullish on activity in 2017. What are some of the sectors which are in the limelight, most in interest? Artificial intelligence, machine learning, AR, VR, IoT, blockchain. But while this is all true, there is money, there is interest, and there are some sectors which are again coming back into the focus. It is also a fact that LPs are, or they continue to be concerned about the frequency with which VCs are raising money now. It's become much faster. The cycles have become shorter, 2.5 years as opposed to, 5 years, 7 years earlier. But that is a concern even for the LPs, because what happens when VCs raise funds faster at shorter intervals? This is someone else's money. You raise the money, you need to deploy that. And that has been the key reason why some of the VCs have been deploying the money the way they did. Sometimes, just following the crowd, and in that process, losing a lot of money and supporting the wrong companies. I think we will take the questions later. I'll be here. We'll just complete because I have a limited amount of time. Happy to take questions, but we'll come back to that. Thank you. So LPs want a healthy mix across all stages. A large number of them still feel Series A and B or later is their best fit, because the majority of them are concerned with the kind of valuations that you're seeing in the early space and in the growth space. So to conclude, global is likely to stay, or it is likely to become even more significant. Warming will continue to happen. Even though returns will be what ultimately matters. But I think overfunding and the problems that come with that will be something we will debate probably another 2-3 years down the line. Until then, I think it is still good for companies to look at the sector and raise money. Now, what does it all mean for us? Why am I saying all this? As I was saying initially, to have good companies, you need an ecosystem which has innovation, funding, global markets, and I think if you look at all of this, you will see that with so much money waiting to be deployed, there will be a shortage of good companies, early stage, growth stage companies into which they can put money. And if you can build, grow the right kind of companies, solving the right problems in the right markets, and scaling in a way which will make you relevant, then I think funding won't be an issue going forward. And this is where I think the second commercial that I have for myself will become relevant. Keiretsu Forum is a global investor network. We've got about 50 chapters. Actually, we just announced our 50th chapter in Tokyo, which will open in a month or so. We funded more than 1,000 companies, been around for 17 years, more than 2,500 investors with us. And some of our numbers from last year again speak for themselves. I mean, we funded 168 companies in 2016, all about 500,000 range. And you would see that it is a good mix of technology, life sciences, consumer, others all put together. I won't take any more time. I think I've already taken most of my time, and we'll be happy to take questions later. Now, this, we feel, is the beginning of another round of funding, but another round of funding with a major difference, and that is investors will become much more selective in what they support, who they support. They will want to do much deeper diligence into companies they want to do. It won't anymore be walking in with a presentation and walking out with a check. Those days are gone. But for good companies and good projects, I think what lies ahead is still very, very positive, encouraging. Thank you very much.
Thank you, Denny. And we've actually roped in Denny to give us an investor's perspective so that it gives us an idea as to what is the kind of action going around. And I think this pie chart kind of sums it up to some extent. What we are going to do is in the next half an hour, we have a short networking break. We're going to come back by 11 a.m. and you can join us for the panel discussion. So we have put across a very interesting panel with diverse backgrounds, and I'm sure you'll be having your takeaways and your questions answered at that point here. Thank you. We'll see you at 11 a.m. Yeah.
ಒಂದು ಪೇಪರಲ್ಲಿ ಸ್ಪೀಕರ್ ಬರೆದ್ಬಿಟ್ಟು ಸುಮ್ಮನೆ ಇದರಲ್ಲಿ ಹಿಂಗೆ ಇಟ್ಬಿಟ್ರೆ ಕಾಣೋಂಗೆ ಬಂದವ್ರಿಗೆಲ್ಲ ಇದು ಸ್ಪೀಕರ್ ಜಾಗ ಹೇಳೋ ಬದಲು ಒಂದು ಪೇಪರಲ್ಲಿ ಹೆಂಗಿದ್ರು ಇದೆ ಸ್ಕೆಚ್ ಪೆನ್ ಇದೆ, ಇದು ವೈಟ್ ಶೀಟ್ 2 ತೊಗೊಂಡ ಇದು ಬೋಲ್ಡಾಗಿ ಸ್ಪೀಕರ್ ಅಂತ ಬರೆದ್ಬಿಟ್ಟು ಇದಿದೆಯಲ್ವ ಅದರಲ್ಲಿ ಸುಮ್ಮನೆ ಹಿಂಗೆ ತೋರಿಸಿ ಆ ಸ್ಪೀಕರ್ ಕಾಣಬೇಕು, ಸಪೋರ್ಟ್ ಇದೆ ನೆಕ್ಸ್ಟ್ ಟೈಮ್ ಅಲ್ವಾ. ಇಲ್ಲದೆ ಹೋದ್ರೆ ಬಂದವರು ನಾವು ಓಡ್ ಬಂದು ಇಲ್ಲಿ ಬೇಡ ಬೇರೆ ಕಡೆ ಕೂತ್ಕೊಳ್ಳಿ.
ఇదొకటి వాళ్ళ ప్రెజెంటేషన్స్ ఒకటి ప్లే చేయాలి. अच्छा अरे
Welcome to the United.
Okay, then fine. So if when I move the slide, will it play? So how do I use this? So this is previous.
Okay, one second. We put up the presentations.
This one?
Yeah, that's the one.
The same video.
It's the same video.
So
If it's linked, then no need to worry. I just got
it
it
is
as a
not
backup.
linked, but it will be played separately.
Yeah.
In
So
the
then,
background.
yeah. So then I'll need your help to
Yes,
play the
sure.
video. So actually, when you go on this slide, if you go to this slide.
No, this one
No,
is slider.
yeah,
this one is video.
No, I just want the slide.
One more?
Yeah.
Okay.
I'll just say, when I need the slide to be, the video to be played.
Your pen drive is.
Okay, no need of pen drive actually. If you already have it in the system, there's no need of pen drive.
Yes.
I just brought it as a backup just in case.
Okay.
Okay, so then I use, so if you make it full screen. No, full screen.
Control right.
Here, this is the one. This one if you touch. No, this. Yes, okay. So, what's the previous? No, so the previous. No, why is the first one not visible?
It's only this one first.
No, that's not the first. I have that. Think global, think UK. That's the first slide.
Which one?
So if you go, yeah, that's the first slide. So this is the first slide.
Yes.
Okay, so then this. So when it's on this, I will ask you to play the
Okay.
video. Okay, and then I'll move on to the next slide.
Okay. Sure.
So then you should be able to off it and let me know so that I can move on to the next
Okay,
slide.
sure.
Okay. Yeah, thanks.
Okay.
Welcome to the United Kingdom.
వాళ్ళకి 2 మైక్స్ ఉంటాయి కదా స్పీకర్స్,
ఇవి కూడా మైక్స్.
అది ఇచ్చేద్దాం వాళ్ళకి. We will be starting in another 5 minutes, just as the audience settles down. Thank you. Welcome back. Just as we are getting started, friends from the Canadian consulate have actually asked us to share some of the details that they have, offerings that they have for startups. Given that there are some policy level changes that are happening, Canada becomes a preferred route for entry in the US market. The Canadian consulate has come up with a program. These are some of the details that they share with the audience here. Going ahead to the panel discussion, this panel has been composed in such a way that we have variety of perspectives. To start with, we have an entrepreneur who's actually created a product and wants to go abroad. So as an early stage entrepreneur, he has come across with various challenges which would be relevant for early stage entrepreneurs such as yourself to understand his perspective. And on the other hand, we have Professor from IMG, Professor Srivatini, who will be moderating the panel discussion. We have an accelerator in consulting perspective from Raghavendra Mysore. He is associated with an organization called US Market Access, and they actually help Indian startups go abroad through market access and connection. And of course we have Denny Kurian, who was earlier he's going to give us an effective perspective what are the kind of opportunities, challenges lie ahead for Indian startups. And then we have Lena Paul representing the British High Commission. She's a senior investment advisor for the National Department for International. What they actually do is help Indian startups set up. So she's in UK. So she's going to give us a little bit of perspective about how governments can actually help us. On this note, I'd like to invite the panel speakers to take stage and start with the panel discussion. Thank you.
Good morning, everybody. It's great to see so many people on a Saturday morning. Thank you for being here today. And thank you, Akash, for putting together a really interesting. And as he mentioned, I think we have a lot of interesting perspectives here. We have the entrepreneur's perspective, more experiential in nature. We also have perspective intermediaries who facilitate globalization or internationalization as we call it. We also have a host country that will bring to us. Missing one panelist who should join us, but we will get started anyway. So what I would like to do is the format of panel for this particular panel discussion will be like this. I'll ask each of the panelists to share their opening comments. I'll ask them some specific questions so that we get a canvas on top of which we can structure the Q&A. Take rounds will go to each panelist. They will share for 5 to 7 minutes their experience, and then we'll open it up to Q&A because we do want to ensure that all those important questions on top of your mind get answered through this session. Okay, so I would start with Manas, if you could give us a little bit of ease, the founder CEO of Bubble. Tell us a little bit about your company, and more importantly, since the topic of this panel is really globalization. Talk about your experience in taking your company global, the choice of location, the timing of this decision, and why it made sense for you. And also share some challenges and surprises came your way along this journey.
Thanks for the opportunity. as a company was started as a social enterprise, and our mission was to create livelihood opportunities for rural communities in different forest areas. In a previous work, I've seen a lot of forest areas being rich in unique herbs, berries, and fruits. Much of that was not being utilized because of lack of market. So our idea was to create something out of just waste forest, so that something that the urban market. And so after assessing very finely zeroed down something which is a unique fruit, which has natural saponin content, which really means that it has detergent properties, and it can be used to wash clothes, utensils, and stuff like that. Back in my time at UK, when I was studying English, I actually saw people using sodas to wash their clothes in the washing machine. So we realized that there is a ready market for detergents, not just in India, but outside India as well. I came back to India in 2015, and was lucky enough to be based out in Bangalore, NSRCELWEP, and that's how the journey started. We initially, these are what the soaps look like. And these are the kind of people we deal with on an everyday basis, individual farmers. In terms of opportunities that I felt from Bangalore, the story in Bangalore, where some of the lakes keep frothing because on the supply side we had the side, on the demand side we started selling eco-friendly and detergents for life. They were actually solving a bigger problem, and the problem was that environmental degradation of detergents, and that seems to be a universal problem. So it's also there in UK, it's also there in Europe, it's also there in parts of America. We had a ready product which I thought we could sell in any country, because every country faces the same problem of using detergents. Anyone using the rainwater actually eventually flows into the lake or the river, whatever, and then pollutes it. So we had this product which we could take to different countries. The timing, when I look back, I would say I would actually wait the product to be more established in India. So that was one reason why we simultaneously started the UK chapter as an Indian chapter. This is what the product looks like. At the moment, the product is being sold mostly in and around Oxford City, in stores, in organic stores, and through different colleges at the university, where the students can actually use these detergents for their regular washes. Some of the issues which we faced when we actually went to UK were, I would say, at the initial level, it's pretty easy to actually incorporate a company in the UK. I mean, you can do it offline. I mean, by being in India, you can actually register a company in the UK. But the main challenge happens when you want to open a bank account, a functional bank account. And I remember that I had to go through like 1 month of constantly like pestering the bank official there in the UK from here in India to actually get the account functional. I think banking anywhere is a little, I would say, bureaucratic. And so that was kind of an eye-opener for us, because I was assuming that the banking transaction things would be pretty much smoother, but it's actually not. The second thing was we were getting some grants from foundations based in UK, and there are quite a bit of regulations around receiving money from outside India, and I think you have to be like 3 years old and have to have a specific registration, compliance issues are there. And so it's very tough for us to, get that grant. So we had money lying, waiting for us, but there was no way we could receive it. And so it was very frustrating at times. But we did eventually get around it. I guess if you talk to your CA or CS, whatever you're dealing with, they probably will give you a better idea of how to go about the whole thing. There are ways to do it. But that was definitely a time where, it was a bit frustrating as well. But positively it happened, so it's pretty good. Then there were issues around, I would say, exports. I had never done international trade before, and so initially we were sending like small packets of say 100, 200 of these products through DHL or the regular freight takers. But there was a change in regulation or something, and then the customs got really strict, and you couldn't send these packets through air. So the only way you could do it was through oceanways, and it's very viable to send through oceanways when you have like a large consignment to send, and we didn't have that scale at that time. So again, we had to wait for quite a bit of time for us to be to reach that scale where we can start shipping by the oceanways. So that was also a very interesting experience, I would say. Yeah, so right now I think we're fairly stable. We have a much smoother process in place now in shipping to both UK as well as we're looking at other countries now, mostly developed countries. We're exploring Japan and the US and the Middle Eastern countries. So that's about Wellness Wash as in brief. I would love to take any questions at the end of the panel discussion.
Thank you, Manas. I have a quick follow-up to what you just said. So you described a number of operational issues that you faced, right? As you tried to set up bank accounts, your shipping and all of that. But strategically, did you face any issues, especially being a company from India and selling a product in the UK market? How was your product perceived? Did you have what we refer to in academic circles as the liability of origin, right? Coming from a developing country, a product that's unknown, a brand that's unknown. What kind of issues did you face?
Yeah, that's a very interesting question. So in the entire FMCG or consumer-driven industry, it's about how you connect to the consumer and how do you relate to the consumer behavior. So when we launched Bubblenut Wash, it seemed like a decent brand name in India. People seem to know about soap nuts a bit. So it was, I would say, not too challenging relating to consumers with the brand name Bubblenut Wash. But when we went to UK, people are a little more informed and about different things. There's a lot more competition in terms of the competing products. And so I guess we did a consumer focus group study and realized that Bubblenut Wash may not be really a brand name that they might be able to relate to. At the same time, there are also people in the UK who feel that it's still a decent brand. So we're still in that dilemma whether to continue with this brand or change the brand as per the UK consumer behavior. We have a consultant there who's working on it now, so it's something which we'll see in the next couple of months. But generally, yes, I think it's a much more regulated market in the UK, for example, outside the branding world as well. I think in India, once we got the product created, we just started selling from day two, and there was no regulation around detergents as such. But in the UK, I guess there's a lot of health standards that have been met, even for things like detergents, even though it's not directly applied on the skin. And so that's expensive, first of all, and that's also time-taking. And until you do that, you cannot launch them in the market. So that was a, I would say, expensive kind of experience there. And there are also even standards around the packaging, like you have to be compliant to certain UK standards of packaging. So we learned about these things later on, and we'd already sold a few packets around the student community at Oxford, and much later we learned about them. So we're now correcting those those mistakes, and now we're on track. Yeah.
Okay, thank you for those comments. I'd like to invite Rajan, who has just joined us. Please come on stage, Rajan. I'd next like to ask the question to you, Raghavendra. If you could just give us a sense of what US MAC does, just for the benefit of the audience here, and I'll ask you a few follow-up questions.
Thanks, Professor. Is the mic on? Yeah. Okay. I represent Global Business Inroads. We have.
Just press it on.
Thank you. I represent an organization called Global Business Inroads, and we have partnered with multiple market access centers, primarily in US and in Europe. Sorry. So in Silicon Valley particularly, we represent US MAC, US Market Access Center, which is a network of about 170 top-notch entrepreneurs from their respective tech sectors who also work at, as industry fellows at UC Berkeley. So US MAC is closely associated with the UC Berkeley and what happens there, the Center for Entrepreneurship there. And we also represent something called European Business and Innovation Network, which is a EU-supported network of about 250 top-notch incubators in Europe. And we represent International Business Innovation Association, INBIA, which is the world's largest network of business innovation, which has about 2,100 university and private incubation centers. And particularly for the life science sector, we represent Global Life Science Development Corporation, which is a PP, a public-private partnership with the US FDA and Maryland government there to help international life science companies access US markets. So FDA will offer all the support regulatory from the regulatory side. Going back to the US market access, which is the main topic for today. US market access, as I said, we come at very early stage before any startup wants to, wants to figure out whether they should go global or start in their home market. So we try and help them understand whether it is worth going to another market to begin with, or should they just, do what they're doing in India and then succeed here, or what we strongly believe is, irrespective of whether you want to go global or not, it is very essential to have a global understanding of how the tech ecosystem landscape is changing, and see whether 2 years down the line or a year down the line, whether you have a competitor coming in from outside and disrupt your own business model. So we try and help offer support in terms of understanding how the tech ecosystem overall is changing across the world, and help them understand whether it is worth pursuing international market. So typically, over the last 6 years since US Mark has started, by two gentlemen who've been seasoned entrepreneurs, who have had 8 or 9 startups, with their last startup being 30,000 employee in 40 different countries. What we have realized is, innovation can come from anywhere, irrespective of whether in the best of the best ecosystems, US or Europe, or or in the upcoming ecosystems like India or China. So, but it is essential to have an international perspective, either before you go ahead and see whether before you set up your office there, before you hire a team there to commercialize your product. USMAC helps you to understand what's competition out there, and what's the how the business models are changing. So what are the kind of term sheets that investors proposing in that particular sector, and see help entrepreneurs from other parts of the globe understand whether they can compete with the competition in US. So if we go by the NASSCOM report, if India has about 4,000 to 5,000 startups across India, the Bay Area alone has about 25,000 startups probably 100 square kilometer radius. So there is a lot of noise out there, but it is essential to create your own channels and navigate through that noise, and then see if you can make the right connect with the customers, with the ecosystem partners, with the VCs. So USMAC also has come out with, along with UC Berkeley Center for Entrepreneurship, to figure out, to develop programs that help international startups in terms of how do you pitch to the customer, how do you pitch to a VC in Silicon Valley, how do you pitch your product, what problem you're solving in 30 seconds, in 4 minutes, which is the typical time that any entrepreneur would get while they make their first pitch. So USMAC helps in terms of training entrepreneurs from across the world in these on these lines. As I said, we GBI as well as our partners US Market Access, we've never believed in a traditional sales and marketing approach. Before interacting with your own local ecosystem or the international, we always recommend and suggest that it is essential to connect with the early customers and see whether what you're proposing makes sense to them or not. It is, being entrepreneurs, we are very passionate about our solution, our product, but it's very essential to learn what the customer needs and see how your solution solves their particular problem than just develop a product in your own lab and then try to sell it. USMAC has developed 3 different stages where one is starting with the boot camp. So we recently were part of a program called Innovate for Digital India, which is supported by, co-funded by both Intel and Department of Science and Technology. What we've done over this 3-month acceleration program from India is, we selected, along with our partners, T-Hub, who were the host for this whole program, is we selected the top 10 startups and then took them through a 4-day boot camp where the mentors flew in from Silicon Valley and gave them a perspective of how their, what's a kind of ecosystem out there for their respective tech areas, and how should, whether there are any steps that they need to take before they make the plunge and go to the valley and then pitch their solution, or there are like 10 other steps that they need to figure out before they scale globally. Starting with the bootcamp in India for a cohort of about 10 startups that we did. The second stage is taking them through a journey of connecting with the early customers and VC community, investor community out there for their respective tech areas. So through this process, each startup were assigned, or the top 10, 3 were selected again. So top 3 are actually on their way to Silicon Valley today. And what we have done prior to their visit is to connect with their respective mentors who would interact with them over remotely and see, give them a picture of their tech landscape, on their particular sector. And all these mentors are, as I mentioned previously, are seasoned entrepreneurs who've, been there, done that, succeeded in the Silicon Valley market. And they gave their insights on to each of these startups on, what stage they are in, do a deep dive into the startup, whether the business model that they figured out is workable or not. And they also, we have also scheduled a line of 10 different meetings with their prospective customers and see, whether their solution makes sense for the customer, target audience there or not. So this is the kind of approach that we take in all the markets that we have, we are working on, including EBN and INBIA, which I've mentioned earlier. The idea in these 2 cases is not just with the mentors, but also identify relevant incubators within these countries, within these regions, and how do you leverage their support services and then scale in those respective regions. So this, in a nutshell, this is the summary.
Thank you, thank you. Just a couple of follow-up on that.
Sure.
Are there, you have, I assume you have already helped several companies make this journey of getting into the US market and surviving and thriving there. So do you see a trend here in terms of the type of products or type of services that are more amenable, that seem to naturally be a fit for globalization?
Sure. Obviously, following the news, we do see a lot of buzz around, of late in the last 6 months around AI and machine learning kind of topics. But I personally believe that innovation can come from any sector. Who would have thought 7 years ago that there was an opportunity, in transportation sector, which Uber disrupted. So innovation can come from anywhere. It all depends on your solution and the business model that you have figured out with the customer. And yes, if there are a couple of other sectors which are fairly mature. If there are startups in e-commerce, let's say, just for the sake of example, if there is an e-commerce company who wants to go to Silicon Valley, but yes, it's a very fairly mature market, and there is a lot of competition out there. So it's harder to navigate in well-established sectors than new upcoming sectors which create their own buzz around. Yeah.
Okay, thank you very much. So on that note, I think I'm going to ask my question to Rajan. Hopefully he's caught his breath now. So Rajan is with iSpirit currently. He was previously with Intuit, and he manages the M&A Connect program for iSpirit. And for those of you who don't know what iSpirit is a think tank based here in Bangalore that creates public goods without public money. Okay,
So they have a number of programs. So now Rajan, in his as a fellow of iSpirit, has been engaged in many programs that iSpirit has launched. In particular, Rajan, if you could just talk a little bit about the SaaS companies. We have an emerging SaaS cluster, especially in Chennai and to some extent here as well. Companies like Freshdesk and Nolarity seem to be doing very well. And what's unique about these companies is also that they are born global. They are global from day one. So just talk to us about what you have learned from these companies. How do they approach internationalization? And what are some of the challenges?
So let me cover that, but can I sort of step back and house the answer for that question in the broader topic of choice of markets? I have like a few slides I want to do it, and I want to cover the specific question in that. Can I use the clicker? Yeah. So let me start with a simple question. How many of us have bought anything online in 2007? 10 years from now, have made any purchases online in 2007? So how many of us know this company called India Plaza? Bought anything from there? Okay, how many of us know about Flipkart? Right. And India Plaza, is it still an existing company? No, but Flipkart is. And so the point I wanted to make is that before 2009, in 2007 there was India Plaza, but today there is no India Plaza. And if you really look at the funding amount of India Plaza and Flipkart, both had initially raised about 40 million, right? And what was different between India Plaza and Flipkart for it to become really, really successful is that they were like 4 years different from each other. That was really the case. So now Flipkart has $10 billion of market cap, does 25 billion Indian rupees of GMV and things like that. But India Plaza does not exist today. Now the point the reason I explained that is that choice of markets, or when markets get created, everything else doesn't matter, right? So it could be the same founder, same idea, but when markets get created, that's when a company becomes successful. Now in India, before 2009, if you're trying to build an e-commerce company, you will be nowhere today. But if you're trying to build a consumer company in India today, then you will have access to funding, you will have access to market, the company will grow very, very big, and if you're able to play it right, then you will become as big as Flipkart. Now the same thing applies for any other choice of market, and choice of market is a very, very critical thing when somebody is looking at doing an entrepreneurship. Now there are many companies which are trying to build software for local India market. Nolarity is trying to do it for India SMB market, but it is not as big as Flipkart, and that's why they're also looking at international. Now the Flipkart moment for building for Indian SMB has not arrived, while for Indian consumer has already arrived. Now, if you look at this chart over the slide here, so an Indian founder can either look at building for India market or for the global market. Now, if you kind of put 3 columns, one to say consumer, SMB, and enterprise, then India consumer market has opened up, but the India SMB market is yet to open up. The Flipkart moment of India SMB is yet to arrive. Now, India enterprise, when you're trying to sell to a CIO, then that is still a market that is yet to even germinate. And there is one bias that I sort of speak when I speak is more about digital software. For physical goods, the dynamics might be very, very different. So you have to keep that bias in mind. But however, an Indian founder trying to build for a global small businesses, a mom and pop shop running from US or UK, and he's trying to build a digital solution, a software or some other aspect, that creates value for him from India, those markets have opened up because companies like Zoho has, sort of shown how it works, or companies like Freshdesk has shown how it works. Now, similarly, India for global enterprise also has, kind of opened up. Now, India entrepreneur trying to build for global consumer, it is a hard bet. There is no historical precedence of that having happened yet. So if you kind of think of this market, India consumer has boomed, India global SMB works, India global enterprise works, but SMB, maybe the Flipkart moment will be in 2 years from now, and India enterprise you still have to see. And this, the reason we are able to see this is that, as a iSpirit, we work with about 700 product startups, and we take our product startups and map it across this. This is the kind of cluster that we see. Now, clearly e-commerce and online travel is not represented. We don't work with them closely. But if you really put it from a number perspective, India consumer is somewhere between $35 billion to $60 billion in market cap. However, the rest is about 10 billion. Now you might say, why 35 to 60 billion dollars? The reason for that is yesterday Flipkart was $5 billion, today it is $10 billion in market cap. So it is hard to know as to whether it is 30 today or 60. Now, so having a perspective about this and saying that what market I am going after will give a sense of what is the growth potential of the market. So the other thing about India is that most of India thing that is happening today is that it is only targeting India 1, which is people who have more than 5 lakhs per annum of annual income. So the 35 to 60 billion dollars through Clear Trip, Make My Trip, e-commerce, Book My Show, all that has happened is focusing really on India 1. India 2 and India 3 as a market is still opening up. So that's another big opportunity. But we are not talking about India. We are really talking about global. So let me come back to the India versus global thing. So one of the things to consider is when you are working for global markets from India, you have a natural disadvantage. You have a natural disadvantage of access to capital, access to good mentors who have been there, done that several number of time, and also access to local policy makers who can work in your favor. Right? When you're trying to build for India market, you should have an advantage, and in many cases it is not happening. You should have access to policy makers, which is not turning out to be true. You should have access to better mentors and things like that. So normally this is how the competing dynamic should be. So this is another factor to consider when you do that. The other big difference, and this is why I explained the previous slide, is that when you're trying to build for India market, you are creating the market. Only in case of consumer, the markets have been created, but in case of SMB and enterprise, you have to work on creating the markets. Now, creating the markets is very different from winning in the market. The playbook, how you go and attack, is very, very different in both the cases. That's another thing to consider. Now, the third aspect would be that when you look at global markets, whether it is consumer, SMB or enterprise, especially in tech, software, digital, the rate at which the market grows is very, very high. So you can see companies becoming billion-dollar companies in 5 to 7 years. Right? You will see a lot of Silicon Valley companies, like 2011 Snapchat did not exist, and now it is like multi-billion-dollar company. But for the same thing for India companies to happen, it takes 10 to 14 years. You will see Just Dial took 14 years to go IPO, Naukri took 14 years to go IPO, Book My Show, same is the case. So that's velocity of market growth is another thing to keep in mind. And when you especially are thinking about taking VC money will expect you to go to $1 billion with under 10 years. And that is another factor that kind of plays in. Now I want to come to the question that you asked about in terms of SaaS companies, is that even when you're saying going global, if you go only focus on SMBs or you try to focus on enterprise, there are two different playbooks that come up. And why is it that these two different playbooks that come up is because what has happened for SaaS is that a underlying shift in terms of how software is built and delivered has changed. Earlier, everybody used to build on-prem and deliver software on-premise. But because of cloud, you could develop software and deliver anywhere. Now, earlier, when you used to sell software, you are actually not selling a product, you are actually selling trust of the person. You're going physically and sitting in front of someone and saying that, look, I'm telling you that if you buy this CD from me, then it will work the way I'm telling you it will work. So you're really first selling the trust, then you're doing a POC, and then the person pays you $1 million to install it. Now, when software as a SaaS was available, so you are almost asking the person to say, go ahead and try it. If you like it, you buy it, right? And also the delivery cost is very, very low because you're doing it over the cloud. So the fundamental shift that has happened in SaaS is that from selling, the paradigm has become assisted buying. Right? So earlier you would go and sell it to somebody. Now you are saying that you buy it, you try the experience, and I'll only assist you in the aspect of buying. Now, so in case of small businesses, people who have only affordability of, let's say, $100 a month, they can go to, they are now also searching online. They are saying, I want to get CRM for running my hospital. If that is the case, then any software that can come as the number 2 or number 3 choice of results, and can get trialed by that particular user who is searching for it, then they only need to make sure that the trial experience goes well. If the trial experience goes well, then you pay $100 and then you start using it. So the paradigm in SaaS has changed from selling to assisted buying. And when assisted buying happens, then it doesn't matter whether the product was built in Alabama or Alvarpet in Chennai, because the person is really looking at the experience and making the purchase consideration. Hence, companies in Alvarpet in Chennai are able to build software that competes with software built in Alabama, like let's say Salesforce, and they are able to do it at a cheaper cost. So the cost of building and cost of selling changes. So that's the Freshdesk playbook. That's the Zoho playbook, where they don't have salespeople in the US, they don't have engineering team in the US, and they are able to sell the software sitting in Chennai itself. Now, in case of enterprise, where the purchase prices are still high, let's say $100,000, you still have to put a person to sell. In those cases, you can build the product in India, and you still have to have a sales team in Chennai. In the US, and that's the playbook of companies like Dhruva, based out of Pune, a backup software company, which is started in 2009, and now almost on its way to do IPO, because they first tested out their product in the India market, they perfected the product here, and then they went to the US, raised money, and then scaled their sales engine there. So, the answer to that question about what is unique about SaaS companies in India is that the paradigm has shifted from selling to assisted buying. And if you build global class product, then you can, especially in the SMB vertical, you can sit in India and then make a sale.
Okay, that's a good catchphrase, right? Moving from selling to assisted buying. Now, I just want to pick up on a couple of things that you said. In one of your earlier slides, you said that the top half of this matrix is really sort of where we are at a disadvantage. But I would like to challenge you on that. Don't we actually have a natural advantage here? If you look at the previous wave of companies, not just product startups, but I'm saying even software services, in the 90s, a whole wave of software services. So we were, in fact, addressing the global enterprise market sitting here in India. And we, I believe, have a natural competence because of cost arbitrage, etc. So could you just elaborate on that? Is it more to do with products, specific point of view, or because to me it seems like we may actually be very well positioned, because whatever money that you raise, you have a longer runway to run with it.
Yeah. So
and you're able to access these markets. And we also have a core competence. Over the years, we have built up that. How do you deal with global customers remotely? Is a capability that we, I think, as an ecosystem have built.
Yeah. So in terms of disadvantage, I meant 3 things. One is access to capital. See, if you are building a Snapchat in US and you're trying to build a Snapchat in India, you will see that in the US there is a patient venture capital that is available. They will tell you that don't worry about business models, just go and acquire users, and then we will eventually figure out a business model. Now, anybody who's tried to do that in India has said that it is a nightmarish experience. Any VC will not understand that, and so the VC money does not understand the long-term patient capital. So that's number one, only from a global consumer perspective. The second thing is, even if you take enterprise, I want to put some numbers in perspective. So every year, US raises about $60 billion of VC money, right? And half of it goes to consumer, half of it goes to enterprise. In India, in the last 6 years, 2011 to 2016, totally we have raised $15 billion. And out of that, 85% of that VC money has gone into consumers, which is in Flipkart, Ola, and the likes. So the enterprise, the venture capital in India, understanding global enterprise or even India enterprise, is very, very little. So, that was one disadvantage I was talking about in terms of access to capital to build. However, whatever you said applies very well to SMB. right? In case of SMB, in case of SMB, the interesting thing is that you don't even need a lot of venture capital to, sort of build the products, manage remotely, and sort of win, even in both in product as well as in sales. Which is why if you really see, a lot, our SaaS capital thing that, there is more concentration of SMB SaaS than enterprise SaaS, right? You will see a lot of companies in the SMB SaaS than in the enterprise SaaS.
Can I ask a question?
Yes, please.
Yeah, I totally agree with you when you say that in the US you have more patient capital. But then if you look at the kind of few companies that have come in India, the ones you mentioned, the Snapdeal, Flipkart, you also see, and even Ola and the others, you also see that the capital that has come into that has not necessarily been Indian capital, and therefore there's no difference in the patient. These are US funds, these are Japanese funds, which are very, very used to being patient in the US. So what changed in India?
So they have Indian managers.
Okay, so that was interesting. So now I'd like to move to Leena. Leena is from the British High Commission, as was already introduced. So if you could now give us the host country perspective as somebody who is welcoming investments and welcoming startups into your nation state. So tell us about what your agenda is and what kind of support you provide to startups wanting to enter the UK market, and and also do comment on how do you balance the need for investment versus creating competition for your own domestic firms. What goes on in that decision-making process?
Welcome to the United Kingdom.
Sorry. Yeah, I would like to begin by saying if you're thinking global, you should definitely think the UK. So I just thought I'll just introduce first of all who we are and then what we do. Many of you must have interacted with the British High Commission here, and as mentioned, most of it must be because of the visas. You must have also interacted with the British Council libraries. We, the Department for International Trade, are the commercial wing of British High Commission here in India. So what do we do? Department for International Trade is responsible for UK's trade across the globe. We also promote FDI into UK. Many of you might be familiar with our old name. We were initially known as UK Trade and Investment. We have just recently rebranded ourselves as Department for International Trade. We have our presence in over 100 markets globally. Now I said, when you're thinking global, think UK. I just want to play a small video to show some of the thriving sectors of the UK.
Welcome to the United Kingdom. Welcome to an automotive industry that exports to over 100 markets worldwide. Welcome to where the world's largest film studios make some of the biggest movies in any galaxy. Welcome to the first testbed for 5G technologies and speeds of 10 gigabytes per second. Welcome to where the world's top pharmaceutical companies find their talent. Welcome to the largest offshore wind farms in the world. air transport system in Europe, a gateway for the world. Welcome to a land alive with opportunity.
Yep, that was just a short video to show whichever sector you are, be it creative, or if you're in the space application, or whether you're in the pharma sector, there's a thriving business for you in the UK. I just wanted to, list out some 5 top reasons of why you should be thinking of the UK. Most of us as businesses first look at, the market access. How big is the opportunity for me back in the UK? We were mentioning about the market access. Just to highlight the vast opportunity for you in the UK, with the 65 million population, it's the 5th largest economy in the world. And also we were talking about e-commerce here. In 2014, UK had 104 billion spent on online purchases. This goes to show how big the e-commerce market is in the UK. It also has, excellent connectivity across the globe. So there's a vast market opportunity for you there. There's also a very good, favorable business environment. It's very easy to set up a business back in the UK. It takes just about not even a day to set up a subsidiary, and maybe just 12 to 15 days to set up a branch in the UK. I know Manas was mentioning about, Manas was mentioning about some of the issues that he was facing initially. I'm sure if he would have contacted the Department of International Stage at a very early stage, he could have avoided many of those issues. In fact, in ease of doing business, I think UK stands 7th. So that's how suitable the business environment is, and it also has a very efficient legal system to back it. One of the most important reasons why we see many of them not just having their base in the UK, but also having their HQs in the UK is because of the attractive tax system that's available in the UK. As of today, beginning from today, since it's 1st of April, the corporate tax rate is going to be 19. And UK has committed to decrease the percentage by 1% every year, which will make it 17 by 2020, which will be like the most competitive tax rates in G20. Also, there's a lot of other tax reliefs that are available for especially doing research in the UK. So there are a lot of tax credit in the form of R&D tax credits and patent box schemes. Also, if you are a very innovative company, there's a lot of tax reliefs for VCs who are investing in this high-risk business, where they get a lot of tax reliefs as well. So that's the reason why many of the VCs also look at investing in many of the innovative companies back in the UK. Apart from that, I would say another important reason is easy access to talent. I'm sure many of us know that out of the top 10 universities globally, 4 of them are based in the UK, which means you'll have access to highly skilled resource back in the UK. It's not just English, of course, is an important business language, but if you're speaking about London, it has almost 233 languages are spoken there. So if you are looking to hire resource, it's very easy in the UK. Also, there's a good, strong research base in the UK. If you're looking to hire or do R&D in the UK, then yeah, you'll definitely find a lot of skill pool in research in the UK. And of course, most important but not the least, the last but not the least, is the quality of life. I think UK has many cities, and especially London, where which has very appealing, which is a very appealing city for people to live and work with. So these are what I thought some of the important reasons why we have seen many of the companies actually setting up base in the UK. In fact, as of now, we have at least 800 companies who have their presence. And India is actually the third largest investor in the UK. And only recently, in fact, last year we have created around 7,000 jobs in the UK. So yes, Indian companies definitely I'm sure, should look at the UK and at a very early stage, and then we are there to help you in that journey. I would like to say, a little more elaborate on how we support companies who are looking to set up or base their operations in the UK. The first thing I would like to highlight is, we being the government, all the services that we provide to any Indian company is free of cost and confidential. So we provide various services. It depends upon, at what stage the company is. What I would encourage is companies speak to us at a very early stage when you are just making plans to go global, because we have a lot of sector specialists that we bring in from time to time, which will help you validate your business ideas. And once you have decided that you need to go to the UK, then we completely handhold you in terms of, registering your entity, setting up your bank accounts. Like he was saying, he had problems with that. Any legal advice that you have to you take in, the regulatory aspects, immigration, like you said, visas is the issue, give us the visa. There are specific visas for entrepreneurs, especially when you're going to set up an entity in the UK. That first person has a specific visa, which is called the sole rep visa, which is given only for the sole purpose for you to go and set up your entity in the UK, and it's given for a period of 2 to 3 years. So there's a lot of information that we could provide you while making that decision. And once you are in the UK, it's not the end of the story. We continuously provide aftercare support, because our interest is that you grow in the UK and also use UK as your springboard to global growth. Like I initially mentioned, Department for International Trade has its presence in 100 markets globally. So once you are in the UK, we treat you as a UK company. So you can use our services to reach out to any country from the UK. So that's the kind of support we would provide any company setting up in the UK. I just wanted to highlight some of the programs we have had in the past 2 to 3 years, so that will give you an idea of what we do. So one of the program was the Tech Rocket Ship Awards. We have been conducting this awards for the last 3 years now. The most recent award, the most recent competition was launched by the royal couple themselves, the Duke and Duchess of Cambridge. We launched it in Mumbai. The idea was to find the bright and the best talent in India, and basically take them. The award was to provide them a fully funded tour to the UK, and also provide UK expertise and advice. And also, obviously, they got an opportunity to pitch to the VCs. So we received at least 600 applications for that competition. We have identified 10 winners. In fact, we have had very good response from Bangalore. 4 of the winners was from Bangalore. And the 10 winners just visited the UK in the end of Jan. So we are planning to have that competitions again. The other program that we conduct is the Global Entrepreneurship Program. This is a venture capitalist program where the aim is to pick up startups and take them global using UK as a strategic headquarter. So this is again a Department of International Trade run program. It's across the globe. We have the 19 deal makers who are appointed. We have a specific deal maker for India. I'm sure many of you would have met the person. He's Alpesh Patel. So he comes regularly. The idea is to scout for those companies who have a very innovative product but don't find the market here. So the idea is to help them, use UK as the base and grow global from the UK. The other program which has received a lot of interest is the Sirius program. This is targeted mainly at young entrepreneurs, fresh graduates who have just come out from the universities. The idea is to showcase that UK is a leading destination for young entrepreneurs. Here they get a cash award for almost £55,000. 30,000 is basically to set up your business, and the remaining 20 is like a year's program where you're mentored, helped to set up your entity, and also basically there is support for you to further pitch to the VCs. So these are some of the services and support that we provide. If you're interested in knowing any more on our services or the programs, I would be happy to connect.
Thank you, Leena, for that brief overview of how one can globalize into the UK. Now, I'd like to come back to you, Denny. We've come a full circle. We started today's session with you. If you could briefly comment, even sort of picking up on what Rajan talked about earlier, we are seeing a trend where investments are mostly going into the consumer space. There's, at least with respect to India. So what has been your experience? Maybe you could comment on that. And also bringing the investor's perspective, talk to us about, do they see preference if a company is locally focused versus if it is globally focused? What is the view that investors approach it with?
Thank you. I think what I'll do is talk about this in the context of a couple of companies we've seen in India and how investors have reacted to that. And I mean, a very broad observation is that the approach changes from place to place, from company to company, sector to sector. Someone was telling me, we first launched our chapter in Chennai, and then we came to Bangalore, and then after that to Mumbai. So someone was telling me, in Chennai, for example, you have a company and you go and tell an investor that, I want to test it, I want to go global, become the biggest company in the world. They'll say, first prove it here. Don't be too ambitious. You are trying to do something which you won't end up doing. And I'll give you a clear example. There was one particular company which was based in Coimbatore. They were in the space of, essentially aggregating, or not even aggregating, taking your neighborhood ironing man and building a business out of that. The company was called Purple Iron. So they were trying to put in a process where rather than give your clothes to the ironing man who's doing it on the roadside, do it in a more organized way and do it at a lower cost. So they came for funding. They were asking for a fairly large amount going by what they were doing, and then the investors had told them, don't even think about Tamil Nadu. First prove yourself in Coimbatore. You take 50 lakhs from us, go to Coimbatore, get the entire Coimbatore market, and then come back to us. That's one approach. But if you come to Bangalore, it could be a very different approach. When companies come here and talk about being hyper-local, want to prove in a very specific area, sometimes you get the opposite of that. People say you're being too modest. You're not being ambitious enough. You need to look at the globe as a market. So it's very difficult to say what investors will ask for. But I think it's also a function of what sector you are in and what your capabilities are. I'll give you another example. Just 2 days back, we were having a discussion with another company which came to us for funding. They are in the nanotechnology space. They are using nanotechnology to develop clothing that would be different, mostly in the performance sector. So they have come up with jeans which is water repellent. So you pour water on that, it'll just flow away. There are many companies which have already been in that space, but this is one young team which has come up with some very interesting products on a very small scale. They sell about 5 to 6 pairs now per day, but it's only been about a month or maybe 2 months, so nothing wrong with that. And their ambition was to take this 5 to 15 or maybe 50 in the next year or so, looking at the B2C market, because you have the demographic advantage in India. So many people are young, they would want to wear jeans and t-shirts, and they wouldn't have enough water or the time to wash it regularly. So if you can have a jeans which doesn't have to be washed for a month and it doesn't stink, then probably there's a huge market, which is very, very fair. So we, even before we took them to the entire investor community, we thought let's connect them with one or two people who maybe understand this a bit more, who are in the textile space. So I got one of my members in Bangalore to come over to the office to have a one-on-one discussion with them. Now he happens to be outside of China, the biggest manufacturer or biggest maker of custom-made suits, high-end suits globally. And he was telling me my production, he employs about 5,000 people in and around Bangalore. He was saying my production in 1 month in Bangalore is more than all the brands put together in India do for their entire year. That's the kind of scale he's operating at. So we put these two together, and he, you know, they were having this discussion, and his point was, why do you even want to look at B2C, which is a tried and tested market? Not many people have made money in that. Even the big brands in India are not really making money. You go to a Mindra or somebody, they will ask you for 50% margins. And then there are the returns, and you know, you have other issues associated. So they were asked, what's your margin? And they said something like 40-45%. So the immediate thing was, you know, you go to an online marketplace like Myntra, the minimum requirement there is 50% margin. So unless you have 70% margin or higher, you're not even going to be able to survive in this sector. So why do you want to look at B2C? Instead, why don't you look at B2B? Yours is a technology which you think is different, is better, environment friendly, fair. Why do you even want to compete with the big names which are also trying to get into that? Instead of that, maybe you should look at being a supplier to some of the big brands. So for example, instead of, you know, you're taking it from 5 to 15 or 20 or 500, let's take this technology, not the product. Let's take the technology to some of the 10 big brands in the world, which I can take you to, not me, but my member. And even if you were to get one order, probably you're talking about 1 million pieces as one. So, you know, it was a completely different approach, and we haven't even come to an agreement as to whether it should be B2B or B2C or a combination of both. But then the advantage I think we see in Keiretsu Forum is the ability to have these kind of members across the world in various sectors with very deep understanding and deep connections in these sectors. So therefore, when companies come to us with potentially big opportunities, we are able to connect them with the right kind of people. And if you make the right connections, go to the right markets, I think you know, going global is very, very possible and appealing. But at the same time, you know, you got to be mindful of what is the problem that you're trying to solve, whose problem is that, is there a willingness to pay for that, are you able to get customers on a local level or on a global level. All of that is important, because at the end of the day, as an entrepreneur, you are coming with a product, and only what matters for you is that you're able to sell that and make some money out of that. All this B2B, B2C, global, local, it's all about, you know, selling. At the end of the day, if you are able to sell 1 million or 1 billion pieces in India, why do you even want to worry about the world? It becomes immaterial. Similarly, if you are able to sell and make money, how does it matter whether you're selling it on B2C or B2B? I mean, it doesn't matter. So at the end of the day, I think all of these are, you know, various means of reaching an objective, which is having a viable product, selling it in the market, making decent margins on that, and making money on that. And if you are able to make money or show that you are able to make money, you will get enough investors, which is what we are, you know, doing for a living. So that's what I would say in a nutshell. You know, there are no hard and fast rules as to whether you got to be global, local, here or there. What works for you as an entrepreneur will work for the investor if you are able to make money. And I think at the end of the day, I would in a way disagree with what you know, Rajan was saying, that there are a lot of people who are willing to tell you, forget about the profitability, forget about the markets, just get the eyeballs or the customers. Those days are gone. Now, I think companies need to show viable products and a viable business plan, a path to profitability, and that will bring them investments and opportunities.
Thank you, Denny, for rounding that up well. And I think we see several themes recurring: global versus local, whether it's B2B, B2C. There's really no right or wrong. That's what we are heading at. And it's also a function of the timing. What worked for, or what is supposedly working for Flipkart didn't work for India Plaza. So it's also where you are, where the market is, whether the market has been created, whether it's about winning the market, whether it's about creating the market, the product space that you are in, the particular sector, the regulations, all of these things play a role. So I think we have now had all of our panelists bring their perspectives to the table, and I think we have painted a fairly large canvas here. So I'd like to open it up for any questions that you may have. We have about, I think 20 minutes for questions.
Maghavinda, for most of the talks that I attend, I do attend a lot of talks on finance, people don't talk about the ROCE, return on capital employed. So question is on you, that in your business, what is the ROCE? And also, what is the average that I have seen in general in different sectors? If you can also tell me, your experience in different sectors, the ROCE part of it, I'm saying, and to you specifically for your business. The ROCE values, two questions,
yeah, sure.
Your business and different sectors that you know of.
Yeah, it'll be difficult for me to comment on different sectors, but I think it's difficult to give a number at this time because we're still early. I think the ROCE comes into picture only once you're fairly established, and then you can think about how much capital investing and then what is the return. But at the moment, I think we're still partly grant funded, and that's really why we really don't focus on ROCE as of now. We're still looking to reach a stage where we'll get more commercial capital going forward, and that's when we'll focus on these numbers going forward.
Yeah, one minute. I'm Narayan here, and this question is targeting to Mr. Korean and Mr. Tyagarajan.
Just 1 minute. I think this question is yet to be completely answered.
Mine is a different, completely different segment, so I do not have ROCE as such. We are service providers. So it's a different. No, we don't have a concept of ROCE.
Okay. Next question.
Yeah. Hi, ma'am. Yeah. This question is in connection to Mr. Denny and Tyagarajan. Both of you are sharing almost similar market areas, and your insights are really good, and it's really worth I'm being here. For the sessions of yours, and my question is when you are getting the business from both sides, like from India to the global markets and from global markets to India, I would like to see the differences of your strategies because of any changes or differences of their choices, and how actually it is affecting Indian market over the global markets.
I am not very sure I got the question fully, but I'll try to still answer that. I think, again, I'm talking only from the funding perspective because that's a community I represent. I think one of the important things is to be at the right place at the right time also. You need to have a right product, there has to be a market, all of that. But sometimes, even if you have the right product, if you are in the wrong place, you don't get traction. I'll give you an example, and this is an example from the US itself. Quite some time back, there was a company which came up with an idea, and it pitched to a couple of chapters, including in the Bay Area, and found no traction. They were in the business, they had developed a technology which would help you extend the life of a wireless router. Now these days routers have become so cheap, why do you want to extend it? I mean, when it is old, you just throw it away and get a new one, right? So nobody was interested. Tried in 2-3 chapters, again the same thing, nobody was interested. Until the time, in one particular chapter, there was a gentleman who was from the US Navy with that background. He was an investor. And he said, let me take you to the Seattle chapter, where there may be a few more people who are interested. And they went and pitched, and it so happened that there were some investors with a Navy background who could connect them to the US Navy. Now, if you read, normally the submarines are built for a certain period of time. You know, it normally takes about 5 years to build that, and then it has a life of 15, 20 years, and maybe a little. So you're talking about a 30-year lifespan. And these submarines and the aircraft carriers come with built-in huge routers. Now, if you're talking about extending the life of those routers, then it's a different ballgame, because changing those could cost a lot of money. And then this company was connected with them. The US Navy acquired them because it was Navy and secrets and all that. It didn't remain a separate entity, but they got a lot of business, became part of the Navy. Now, that's what I mean when I say you have to be not only at the right time, but also at the right place and get connected to the right people. And that is precisely what we are trying to do in Keiretsu Forum. It's of course, a funding platform where we bring investors together, but it's also a platform which brings people from around the world with varied experiences. And oftentimes when companies come to a particular chapter and may not even get traction, we are able to tell them or direct them to the right places where they may get interest and funding. Another example for is a company which came to us in aerospace, where they are working with some of the state-run entities in India to come into the offset space. Now, under the Make in India program, when foreign companies come and set up defense establishments, there is an offset clause where 40, 45, 50% of the equipment or the parts will have to be bought from Indian companies. And there aren't indigenous. And there aren't that many Indian companies which are ready to supply that. So there was this company which is getting into that space and working with ISRO and DRDO and others to co-develop products, supply products for them and the foreign companies which are coming into India to make submarines and airplanes and all of that. Now that is an opportunity, but you have to be in India. Even though it's a global technology and product, if you want to tap into that opportunity, you have to be in India, and you have to be a 51% Indian company. So it's very, very different, but I think the objective is to get in and understand what will work where. And if you figure that out, I think again you catch hold of that opportunity. Yes. I don't know if I answered your question, but this is broadly what we do. And I think you had somebody else also in mind?
The gentleman there, and then you come.
Fully answered you. Okay, anyway, I'll leave it to you.
Okay, so we are a SaaS-based company. Now the point is we are already doing pretty well in India. We are present, we have customers across pretty much every state. And we have customers in a couple of neighboring countries, the US. Now, what we see, we can actually access customers globally. But one of the challenges that we've been trying to figure out is how to figure out the local taxation laws that we need to comply with. The government of India recently, came up with a new tax law wherein all vendors that are providing services to customers in India need to charge service tax. So if I'm a US company or a UK company trying to provide services to customers here, I need to register for a service tax number and I need to charge tax, pay. So, we're trying to see, is there a way out? Is there what's the best strategy out to, resolve this in literally, let's say 90 countries around the world? Because the solution is that we are working on the system, probably in 2 months we should go live, but whether we go live in India or global, it's the same thing, right? As long as we know the taxes and different compliances. So, and I'm sure some of you in the SAS, in the SaaS-based businesses might be facing the same issues.
Yeah, it's a very good question, but very, very specific. I don't know it will have general applicability to entire audience, but I'll still take a minute to address this.
Thank you.
At least share my thoughts. So there are many, many issues for software product companies to work within India, and one of them is the one that you exactly pointed out, that a SaaS company has to end up paying both VAT as well as service tax. Now, the good news though is that with GST it will become simplified. So, hopefully that will get solved, and this is the exact kind of work that we are trying to do within policy work within iSpirit. So to sort of simplify such a misunderstanding for product companies. On your question about the broader how to get it solved for many markets. So I used to sort of run product management for QuickBooks, and one internal joke used to be that complexity is good because that is an opportunity. So what is a problem for you is an opportunity for another startup to solve. Correct. Right? And there are few companies in the US which are already doing it. If you look at a company called Avalara, within US it is trying to solve this problem as on a state basis, on a zip code basis. I see. It'll pick up tax rates and sort of give it as an API for you. There are many other companies. There's a company in UK which when I was at Intuit we had acquired called Creed, which was trying to solve for this. So what I'm saying is that is an opportunity that you will see some other startup will solve.
I see. Any other comments?
Yes.
Another way of looking at that is also finding the right partners in each of these territories that you want to operate in. And that is where I think networks like ours come in handy. I mean, let me do a little bit of PR for that. So in addition to investor members, we also have a forum resource member category where some of the top law firms become a part of it. Here Fox Mandel, ACB, Trilegal, all of them are members. Ernst & Young is a member. And we have similar members in every chapter that we operate, in India and other markets. So if you have a specific market in mind as your target territory, it would make sense to not only raise money locally in a chapter, but potentially go to that chapter and find a member who would be interested, and also these kind of resource providers who will still charge you a fee. It's not going to be free, but it'll be way less than what you would pay if you were to go directly to them. And also you have the comfort of being in a community which is together helping companies navigate new markets. So providing market access, providing access to technology, providing access to expertise is very much a part of what we do along with funding.
I see. And unfortunately, we are not looking for funding. We are already profitable from bootstrap. So does it also help us in some way? I mean, is there a relationship that can be formed? Or?
Absolutely, absolutely. In fact, more than Indian companies going abroad, we see a lot of overseas companies looking to pitch in India. And many of them are in this category. They don't want funding. And even if they do want funding, for that little amount of money they would raise in India, it's not even worth coming to India. I mean, they can raise so much more money in the US. But the reason they come here, either to find some partners and raise money through them, or without raising money, find partners, is precisely this. It's not always money that matters. It's the right connections.
Correct.
And the navigation you need to do in a particular market that is important. So if you, for example, want to go to a chapter, pitch there, not for money, but for other resources like partners, there is an opportunity. Thank you.
Thank you.
Good afternoon, everyone. This question is directed to Leena. It's a bit of a speculative question, given the fact that Brexit is looming large. Will that reduce the attractiveness of the UK region, given that their access to the European market would certainly be reduced and diminished? What are your thoughts, or what is the department actually doing to make UK still attractive for foreign investment, especially from India? Thanks.
So yes, so what I would like to say is, first of all, on 29th is when the Brexit was triggered. So there's a 2 years negotiation period until when finally the UK will exit Europe. So you still have a 2 years period where there's not going to be a lot of changes, but you will still get to know what the changes are likely to be based on the negotiations that are happening with the euro. So basically, there is a time period. And what we have also seen is, many of the companies who try to look at Europe, I know of course they look at the entire Europe, but UK itself is a major market. And if you see in terms of percentage, there's a high percentage of companies who are looking UK as their main market as well. So what we feel is, UK itself is a big market, And based on the negotiations, we are hoping we'll have a better deal with European Union. And also, I think India is increasing its chances more, both in terms of trade and investment. India is becoming a very important country for the UK. So we are seeing in both ways. India will actually benefit. In fact, if I have to give some figures, we have seen a lot of acquisitions happening from Indian companies. So basically, they are thinking it's a nice time to go and acquire companies in the UK because of the pound value depreciating. So in terms of even the investment that's going into UK, we have not seen any reduction this year, though Brexit was triggered this year. So as what I can say, and this is my personal view, is that until 2 years, I don't see major issues happening, and there is a time frame when companies will know and will have time to plan exactly based on the negotiations that will happen.
There's a question somewhere here.
Yeah. Hi, so I have something for everybody. So Jenny said that, the time when VC said that, take your time, build your business, acquire customers, and then, then we'll see business model. He said it doesn't exist in India anymore, which is actually corroborating what Mr. Rajan said, that, the disadvantage globally is that a Snapchat can afford to take 3 years to figure out how it will sell. And at the end of the 4th or 5th year, he's still figuring out how to sell and everything. But that's not possible in India. Today, if I'm building something if I'm building a Snapchat, it is so extremely difficult to try and pitch or sell to a VC in today's atmosphere, in today's investing environment. How should I, in that graph, if I am at a natural disadvantage, how do I navigate through that? So when I know there is money abroad, or I know that, in the US or wherever, I could probably be funded, or it could be looked as lucrative. Today here, I may actually fail or not reach the critical mass just because I didn't get in money here right now at this stage. How do I navigate that or figure that out? Because clearly, because of whatever issues we've had with our e-commerce or whatever, VCs are wary, to enter a market like that. So how do I figure that out?
You want to go first, or? I think, I should qualify. I'm not saying there is no money for the right idea, but I think it's important to understand what goes on, behind this whole idea of burning money to get eyeballs and market share. It comes from a winner takes it all mentality. The expectation is that once you become the winner and the biggest, everyone else will either be eaten up by you, and you then get market monopoly, and you will be able to make up for the huge losses. We are talking about thousands of crores of losses. Now, let's look at what has happened. Flipkart was a clear example of that. There was so much money which was going into that. They were number one, and it is probably still number one, I think, in terms of sales. And they were clearly turning out to be a winner. But then came Amazon with a whole different logic and a much deeper pocket. So the winner itself became different. So what could have been the old way of the winner taking it all may not hold anymore, which is why you have all these problems. Rajan was talking about the valuations going from 5 billion to 10 billion, but what we forgot is it had also gone to 15 billion and then came to 10 billion. Why is it happening? Because there is a concern that the old way of the winner taking it all may not happen because the market dynamics has changed, which is why there is a concern now about throwing good money after bad. Some of the investors who put money into these have no other way but to keep supplying money, because if you let it go, then the entire investment goes, and therefore they may continue to get investments. But overall, I think there is an expectation now that companies will have to find sustainable models, sustainably profitable models. Even that was a way to profitability by throwing money and gaining market share. Eventually, the expectation was that you will become profitable. When that doesn't happen is when the concern comes. So I think e-commerce is a very different space. Let's keep that aside. There are a lot of companies, and e-commerce and IT has only shown us the tip of the iceberg of what can happen in terms of innovation, in terms of new companies. There is a whole lot outgoing there, including in India. It's just that people haven't looked at it, but now they're beginning to look at it. Aerospace, healthcare, food processing, products, real product. These are areas in which you don't really need to get the eyeballs. You can build a product, build profitability, and go to market, one territory after the other. And there is enough and more money waiting to be invested into that. Healthcare.
Of course,
Yeah.
but aerospace and healthcare is something that not all of us can get into and not all of us want to get into.
Yes.
Yeah. So, I can't build an aircraft. I can't.
Right.
But I can do something else, and that may be very innovative, but it may require some amount of gestation period. It may be a product that would require a year and a half, or 2 years.
Oh, absolutely. I think people will be willing to give you more than a year or two.
It could take some time. So, like, for example, that's what I'm saying. When something is innovative, like Snapchat, no one could visualize the need for something like Snapchat. No one thought it was necessary. Today, there is like a whole generation that thinks it's absolutely necessary. Right?
Yeah, I agree. I never understood what Facebook would be
exactly
when it started.
Also,
and same thing with Snapchat. So I don't think I am the right person to comment on that.
Right.
I will stay away from that. But again, my point, and I'll pass it on, is that other than that space, for good companies, there is a lot of capital available there. But let Rajan also.
Yeah. So I think there are multiple aspects to the question, and I want to sort of unpeel that a little bit. So one question, if I understand it right, you said that how do I navigate the expectations of the growth of a particular idea to become a big market with respect to VC, because in some cases the gestation period may be long and VCs are not having that long horizon. Now, I actually think first you have to sort of unbundle that, what do I have to do to sort of meet the expectation of the VCs as well as the market. I think that's an important thing. As an and then the market that you are in, how long it is going to take. So VCs in general, they have a mindset that, they have a fund cycle of 10 years, which means in 8 years they have to return capital. And when they have to return capital, they have to return 3 times the capital that they have raised, which means that in 5 years that startup has to, one of the 10 or 100 or 50 startups that they invest should return them more than 20x, so that the math works. Now, if you are building some ideas where it is not growing that fast in 5 years, then the VC model does not work. But what has happened in India is that startup is equal to raising VC is the kind of mindset that has sort of creeped in, and we have realized that we initially thought Flipkart will reach, or for consumer ideas in India will reach sort of $1 billion plus in less than 5 to 7 years. That is not true, and it still takes about 10 years to reach there. So what I'm saying is, as an entrepreneur, you have to realize that, do you want to play into that game or not? Do you want to play in that market or not? The other thing is, how long does it take for something like that to happen? Now, I explain this with a very simple analogy. Most people, they go to VCs because, they get enchanted by the whole VC industry. But, they don't realize that it takes 10, 15 years to build the business in different markets. Now, in case of Snapchat, so the second aspect of it is then, how do you know whether Snapchat will win, and how do I navigate whether I want to build the Snapchat idea or not? The reason I drew those market map is that if you realize that you are in this place, then it is going to take you 4 or 5 years in Valley. It will take you 10 years in India to do it. So you adjust your expectations like that. So that's the way to kind of navigate this. Then the further question that you could ask is then, okay, should I build Snapchat idea, or no Snapchat type idea is possible or not? There I would put VCs at fault a little bit here, because what VCs have ended up doing in India is that they've always asked, saying that whatever I'm going to fund, is there an equivalent of that in the US? If there is no equivalent of that in the US, they have not funded it. Even in case of Snapchat, after it has become successful, there are VCs that are willing to write the Snapchat competitors like Hike to sort of fund them. Now, in case of India, if you pick ideas that will be extremely unique to India, and if VCs bet them, then they also can become much bigger than a Snapchat kind of equivalent. And from our initial studies, we are seeing that anybody who's going to build for India 2 that I talked about in a pyramid, there is an India 1 which is more than 5 lakhs per annum, and India 2 which is between 2 lakhs and 5 lakh per annum. If people are going to build solutions for that, whether it is consumer, small business, or enterprise. We are, we are confident that we will see Snapchat-like businesses that will emerge out of that. The other is, to look at SaaS. Either SaaS or in India too, there will be companies, in the span of, about 7 years that will be as big as Snapchat from India. Does that answer the question that you asked?
Fair enough. Okay.
Hello.
Yeah, there was a question. Who has the microphone? Yeah.
Yeah, hi, my name is Dominic, and my question I have is regarding crowdfunding. How successful is it in India, and roughly who should go for it, and what is the percentage of success and against the volume?
Again, I'm not an expert on that, and we are not in that space, but I think there have been a number of attempts, including some platforms which have been trying to do that. They've been successful to some extent. The amounts have been smaller, but I think there have also been some concerns raised by agencies such as SEBI, saying that that's a space that will need to be regulated, and therefore what may be happening, successful as it may be, need not necessarily be legal. So I think the short answer is not a lot has happened in India, and there is a long way to go, and before that there has to be some regulation to say what is allowed and what is not allowed.
Yeah, I'm no expert either, but what I want to say is that, the kid is only 5 years old and you're asking what is its board exam results.
Okay, we have time for about 3, I see 2 hands up there. 3 rapid fire questions, please. And then we need to wrap up the session.
Hello, on your extreme right here, I have the mic.
Oh.
Yeah, so a quick question to Alina. How do we get in touch with DIT?
I can give you my contact details.
I didn't see the slide. Okay, thanks.
Hi, Rajan. Here. On the left side.
Okay.
Yeah. So just wanted to check, how do one test market all these SaaS offerings in global markets? Because any market which you go might take a good amount of time in terms of reaching out to the customer. Is there a forum or is there a way where people could test market it and probably learn it faster? And what's the kind of time frame which somebody should do while doing a test market?
Are you specifically asking about SaaS or?
Specifically about SaaS.
So in general, trying to find out whether a market exists or not, there is no other way other than to just experiment and find out, right? Now, in case of SaaS, it has become a little simpler. The reason is that when do markets what are markets? Markets are a set of customers, right? Customers are, using some offering that you are trying to develop. And, market says that there are enough number of people or enough number of such customers. Now, when markets get created, when there is either change in a technology, when there is a huge cost difference, right? That, people who could not afford are able to afford it right now. Or it gets created when a huge policy change happens or when a user behavior change happens. Now, in case of SaaS, what has happened is that there is a cost structure change that has happened because of AWS and cloud that I mentioned. The other change that has happened is that users have changed their behavior. Earlier they used to sit, software people would go to them and say that buy the software. But now they have started going online and searching for themselves. So if you can figure out a way that when somebody is searching for a particular use case, that you surface in front of them and show your product, then, and if they are able to use it, try it, and then sort of buy it, then that there is merit for that. And a lot of SaaS companies have figured out that in many cases, starting with something as simple as CRM or ERP or a accounting package, people are searching online. So one simple sort of hack could be that you could create a Google AdSense just for testing, where you are giving the highest bid and say that if you are looking for accounting package, then come and try this. And if you are able to see conversion ratios that sort of justify your cost of advertisement, and you are able to come up with a price point that people are willing to pay for a couple of months, then that there is business behind it. Now this is a kind of experiment that you would do to try and find out whether a SaaS for a small business who is trying to sort of search online works. In case of bigger customers, like you're trying to build ERP, which is like a $500,000 deal. In that case, you'll have to have physical access to that CIO using either US Mac help or UKTI help and say that, this is the product that I have built, or this is the, sort of deck that I have. Do you think, this will be useful for you or not? So the approach will vary differently based on, the target customers that you are after, even in cases as. But most of the cases I'm seeing for now, people are just, doing Google ad test, or they're going to a certain Facebook forum or some other place where they know where their customers are hanging out, and they're saying, try it, try and use it.
Last question.
Yeah, I have a mic here. Can I take it?
Go ahead. It's okay. I can connect with them afterwards. No problem.
Sure. Yeah, actually, what's your take on technology transfer? You see, there's a technology that I've been given access to from the US. The event is going to happen in London, and the applications are global, literally. So how does one proceed in this? The fact is that I really have a very small team of about 3 people. So what would be the best way forward? Thank you.
Is this directed at any person in particular? Okay, anybody wants to take?
I don't think without looking at the details we can give an answer. We only look at it from an investment perspective, but we need to see details.
So what I would suggest is, I think it's a very specific question which might be better addressed offline, right? So it may not be of generic interest. So I think we will close at this. We've had a great session. We have talked strategies, venture strategies. We have talked market access. We have talked investments. It was an energizing conversation, and I would like to thank all the panelists for sparing their Saturday morning to be here with us today. And I hope you all found the morning well spent as well.
Thank you, Professor Vardhani. On behalf of NSRCEL, I would like to thank each of the panelists and the audience for being part of this conversation. Starting with Denny, thank you for providing an investor's perspective. It brings to the attention of all those who are interested on how they could access these international networks of investors, not only through capital but through other resources. So you could reach out to Kiritsu Forum in case you wish to take your specific query forward. And thank you, Manas. He's one of our incubated startups, and he was hesitant initially whether I should be coming on to the panel. But I said that, being an early entrepreneur, he would really give those insights that are very pointed, very specific, and very relevant to someone who's really starting out. And so thank you for very clearly putting out each of these challenges that you faced. Raghavendra, thank you very much for coming down. He's given us an intermediary perspective. In some sense, he's given us the various kind of opportunities that are available to access the international markets through accelerator or incubator programs. So if you feel that approach is more comfortable, you could also reach out to him particularly. Thank you, Professor Vardhani, for summing it up and very neatly bringing the conversation together and asking the right set of questions. And I think that has really directed the panel discussion in a more focused manner. Thank you very much. And Rajan, thank you very much for agreeing to come over and coming up with those very measured and sharp insights, and which I'm sure each one in the audience has benefited from his perspective. I think iSpirit is doing some really interesting work with regards to global M&A, and I think he'll be the right person to help you with more information on that. Leena, thank you very much for bringing together the perspective on UK, and you've also answered the questions very specifically and taken their questions very well. So you could also look at, and I personally interacted with the UKTI now Department for International Trade. They're very helpful, and they provide these services free of cost, so you could actually access them. And not only UK, there are other countries which have their business offices in Bangalore, which you could access if you have a very specific connect that you want to take it forth. And finally, thank you all for coming over and engaging very well in this productive discussion. And if you are interested in NSRCEL's offerings, if you want to get your idea mentored, get it validated, you can actually come over, apply on the website. I had shown it earlier. And then we'd love to take this conversation forward. Thank you very much for being here. Hi. So, so the current batch is still underway.
Like I would love to do something because I do have a family business background and inside out looking for courses which can actually help me out to understand what kind of thing I can, what kind of courses I can go up to after because I'm currently studying in Bangalore. So
Okay. Why don't you drop by NSRCEL one of these days? We'll have a more specific conversation because this batch opens up in June, I think. So the application should go online anytime soon for the entrepreneurs.